Hey hustlers, welcome back to my channel. Thank you so much for tuning in. If this is your first time, then please do click that subscribe button and join my family of hustlers. We talk about personal finance and making sense of your finances here. So before we go any further, I just want to say thank you so much for 1,000 subbies. Yay! We're actually on the road to 2K right now, and I want to do a giveaway at 2K, so please do subscribe, help me get to 2K so I can put together a very exciting and lovely giveaway to just thank you guys for all the support, the comments, the love. I see it, I feel it, and I thank you so much. Right, before we go any further on today's topic, we are talking about buying, selling, or holding. As you guys know, we are currently going through a global crisis right now. Stock markets are crashing, investments are downturning. We're currently in a bear market where prices are going down. And there's just lots of movement in people's investment portfolios. There's question on what to do, especially for first-time investors. This can be very nerve-wracking for you because you actually don't know what to do. And I've just gotten some questions from you guys, especially in my DMs on Instagram. Please do follow me if you aren't already. And I'm just getting some questions on what am I doing? Am I buying more? What am I buying? Am I selling anything? And all of that stuff. So I thought I'd put together this video, give you guys my perspective and what I'm doing in terms of my investments. And then at the end of the video, we'll go through what the gurus are saying, what are the experts saying that you should do in a situation like this or with regards to your investments. Please do know that this video is not any financial advice. If you are looking for financial advice, please do see or contact a financial advisor that is registered with the FSCA that will put your needs above theirs. So now that's out the way, before we get into the talk of what am I doing, am I buying, am I selling, am I holding, let me just define with you guys that I have an investment plan, and I treat my investments differently depending on what I want to achieve with them. For example, I have short-term, mid-term, and long-term investments that I have in place. So let's start with my short-term. I have an investment with Liberty, the stash. I treat that as a short-term investment. Basically, why am I saying I'm treating it as a short-term investment? It's an automated saving type of investment. So it basically automates my savings for me. Money goes off my account automatically, and they then do the investment on my behalf. They invest on the top 40 JSE listed companies on my behalf using the Stash app, and I'm just treating that one as more of a liquid short-term type of investment. Should I need any money from it, I will withdraw. So it's more of a short-term situation for me. Then my mid-term investment is my Frank investment, quite similar to my Stash, but I'm treating this more in terms of a mid-term. So I'm looking at a 3 to 5 years type of investment on this one. And then I've got long-term investment, which was my retirement, which is my ETFs on easy equity. So all my ETFs, all my shares, those I'm treating more as long-term. I've also got impact farming investments, and I've also got cryptocurrency. I've bought bitcoins on the Luno app. So those I'm treating more as long-term investments. Now in this situation, because I've defined to you guys, I've got different types of investments because I have an investment plan, and this is very important. When you are starting to invest, look at each investment individually and decide for yourself, or have a plan as to why you're investing in that specific thing. Are you looking to invest in it for a long term, so 5 to 10 years or even longer, or is this something that you want to cash out in 5 years or 3 years or 2 years? Or it's just just you taking a chance and putting money into this investment, and you actually don't really know why you're doing it, which can be quite not difficult, which can be quite tricky, because I mean, if you don't really know why you're investing and why you're putting money away, it becomes very hard when you have to make these financial decisions of, are you buying more, are you selling, or are you holding? So it's always very good to have a sort of an idea, even if you don't have a detailed plan of this is short term, this is mid term, this is long term. But as long as you understand why you're investing and what each of the investments that you have are for, and as I've just explained to you guys, I've got short term, mid term, and long term. So with my short-term one, which is my Stash app, I am obviously treating this short term, and I'm not selling or I'm not withdrawing yet until I'm in a financial situation where I need some cash really quickly or fast. Then I will obviously liquidate this account and turn it into cash and be able to use it. So for now, I'm currently holding my midterm, my franc. My franc is split up. I have a whole video about the franc app. If you want to check it out, I'll leave it down below so you can have a look at it and see. I definitely really enjoy this platform, and I'm treating this as more midterm. It's split between, I have a money market or cash portion, and then I've got a Sastrix top 40 investment portion, which is 80% of my investment. So this one, obviously it is fluctuating a bit more because of the equity part of it, and equity right now is very volatile. So the markets are very volatile. Volatile meaning it's very risky, it's high risk, there's a lot of movement, things are going down, things are going a bit up, and then going down a bit more. So we are in a downtrend and in a bear market, as I explained earlier. So I'm not doing anything at the moment. I'm really just staying very close to this investment. I'm checking it regularly just to see where we are. I'm reading up on the news and just keeping myself informed, but I haven't made any decisions or made any major changes to this. Then my long-term investments, all my easy equity investments, I've got a tax-free savings account, and I put money away in ETFs there. I've got shares, I've bought some shares. So this one I'm literally at the moment holding. I'm not selling anything. I'm just staying very, very close to my investments. I am obviously monitoring them, and the thing about investment is that you buy at this level. So let's call this your buy level, right? And anything above that is a profit, which is you'd be in a bull market, and anything below, which is currently what's happening now, is a loss. So we are at a bear market. So anything that's going down, and then anything that's here, you are flat on what you had paid. So basically you're not making a profit or you're not making a loss. With investments, as you've seen in the past, history is repeating itself. 2001, the 9/11 crash, the markets crashed, went down. We had a recession 2008, 2018. Now we are currently going through another situation where the market's crashing. It's a global crisis. Honestly, experts and history and the market keeps on repeating itself, and after a while it will turn. As it's going down, we will have a bull market, and the bull is going to start running again, and I want to be on invested, so when it starts turning and you know, running again, I'm in a position where I'm in a favorable position. Right now though, things are not looking good. In March, I think like first week of March, my investments was about 30% down. They're now sitting at an average of 12% down. So it is improving slowly but surely, but you know, I'm just obviously keeping very close to them, and my investment plan for my long term is to obviously hold for a long-term position. However, I am a bold investor, right? So by bold meaning that I am moderate to high risk when I do make my investments. So it's very important for myself to spread my risk and not put all my eggs in one basket, to give myself some movement and to also manage my risk that way, because I have a higher or a more appetite for risk. So what I normally do, as I've mentioned, I've got different investments in different places and I'm treating them very differently, and I'm just managing my risk that way so that I don't put everything in one place. Another good way or good measure to measure your risk or to manage your risk is to say that any loss at 30%, the threshold for you to incur a loss is 30%. Anything below that, you are getting out, you're taking your money, whatever money you have, and you are going to wait and time your entry again into the market, either buying the same products or buying something different. Now the trick with that one is that you never really know what the right time is. They always speak against timing the market. It's very not recommended to try and time the market, because you really can't, and if you do try to do that, you are going to get yourself into trouble, because so many things happen. You can't control the market. So many things just happen and they are out of your control, like what we're currently facing now. So trying to time the market and trying to get in at the right time, and it's just not for me personally. As a beginner, someone who's just started investing about 2 years ago, I'd rather let the market tell me what to do, or I'd rather let the information speak for itself and give me a decision, and not me trying to figure it out and trying to be clever about it. So in this instance, my risk threshold is at a 30%, but I waited and decided, you know what, I'm just gonna hold on to my investment. And holding on has been into my favor because I'm currently at a 12% down from a 30% beginning of March. It just depends on why you're investing and why you're treating those how you're treating those investment tools or portfolios. How are they applying to you? Another thing is that you know, someone is asking me buying. Currently, I've realized that I need to be more aggressive in my savings, so I'm currently not buying anything. Yes, I do plan on buying some shares at the end of the month that I've been keeping a track on, and I'm seeing there's growth, progress, and you know, a turnaround. But this notion of buy low, personally, I don't believe in that philosophy. I believe that if a specific share, for example, is showing me growth, progress, it's showing me that it's progressing, the company is making very good, sound financial decisions for the growth and the betterment of the company, and I can see that in 3 years time I can get my money back without worrying that it's going to plummet and I have to wait 5 years for it to turn around. That's how I basically base my decisions on buying. Now, is it wrong to say that you should buy low? Not really, because buying low in the long run has the potential that your money could turn, and you could be at a better bull position when you are selling. So if you bought at 20 Rand, in 5 years time maybe that share would be worth 80 Rand, so you kind of have won. But at the same time, you need to look at the company's history. You need to read up about that specific performance of that. Either is it a ETF bundle or is it a share, and have a look and see what is the projection. Has something like this happened in the past? Has this specific item plummeted down? How did they turn around? How long did it take for them to turn around? Personally, I don't see the point of buying shares at 10 Rand when I can buy a share at 30 Rand and get my return and growth in 2 years time, instead of buying a share at 10 Rand and waiting 6 years for it to turn around to be at 30 Rand. I don't know if that makes sense. So don't just buy because it's cheap. Buy because you can see growth. Buy because it's in line with your investment plan and your investment growth. You can't just buy low. What does that mean? Personally, I would shy away from this philosophy. It's good to buy low because obviously you are at a better position. Should the price go into bull and increase, you will obviously be earning a bit more profits when you do sell at a higher price. But at the same time, don't just buy blindly because it's a 10 Rand share, you know, and you know, like, it has to make sense. I can't stress enough how much this has to make sense. And yeah, so that's my standpoint on where I am right now. I am planning on buying. I'm currently holding everything that I have. And my one thing is that I am not panicking. I am not attaching my emotions to what's happening to the market. I can't control the market, so I've decided I am going to do what I can, and I will control what I can control. And that is just me making a decision on my investments. Am I selling? Am I buying? What am I doing? Right, before we go on too long, you guys kind of know where I am standing and what my standpoint is. Let's go through what the experts are saying with regards to this. So the experts are saying that this depends on your goals. What are your goals? What are your needs? And I completely agree with this because I follow the same philosophy. All of my investments, as I've explained, go towards my short-term, mid-term, and long-term type of goals and needs. Long-term is if you're planning on buying or holding or investing in the long term, you are willing to ride out the pullbacks, which is currently something we're experiencing now. So I am in a position where on my long-term investments, I'm willing to ride out the pullbacks, but of course I'm going to be mindful of what's happening with them. I'm not going to let an account go further down and I lose all my money and I'm like, oh, because I'm holding. No, I also have to apply my logic and say, is this the right time to get out of this, or is there hope for me to hold, kind of thing. Then the next thing is that some investors are taking this opportunity to buy at a low price, which is something that I've explained. And then some investors are taking this opportunity to dial down on their risk. I spoke to you guys about how I'm managing my risk. I manage my risk by spreading it, by investing in different things. And you know, some things are more set, like for example my impact farming investment, that's more long-term, that's set, that's an 8-year investment because I've invested in blueberries. I can't really affect that investment. I just have to wait it out and ride it out, and that's more kind of the nature of that investment makes it more long-term and fixed for me. So if you are someone who's just invested in one thing, this is maybe an opportunity for you to sell, you know, pull back on risk and kind of manage your risk a bit better so that you don't have all your money sitting in one place. Then buying. if you have any money available right now and you don't need it in the next 5-10 years, and you are fine with, you know, riding out the downs, and you're okay with the market kind of going down, and if it continues to decline, it's not much of an issue to you, then you can buy. You know, the experts are saying that. If you want to have a more balanced account, so maybe your account is a bit underweight, you are currently sitting at a 45-50% loss, and you just, you know, your account is just really underweight, you can sell and buy more other stocks to just balance this out, to have a more, you know, kind of balanced approach or balanced investment portfolio. And then selling, what are the experts saying in terms of selling? Selling is if you need the money now, like for example, you need it now rather than later, and you don't want to lose more than what you already lost, which is really good. Cut your losses where, you know, you can see this is the further you can go. Cut your losses there, and maybe try again, re-enter the market, find another better place to enter the market and buy again. But I wouldn't completely say stop investing and never invest again, because this is what the market does. This is how the market you know, kind of reacts in response to certain things. This is out of our control. We just have to relearn how to react to it with a sound mind. Don't attach your emotions and your feelings to the stock market. Honestly, you are gonna drive yourself crazy if you're trying to control that. Then another thing which is advised, which the experts are advising that you should sell, is if you're a few years within retirement. Now what this is that you don't want to have a big loss affect your retirement investment, so you'd rather sell now and get out with whatever you can, because you don't want a big loss to affect all the years of investing that you've done whilst you were saving for retirement. So that's what they are saying, that this is advisable for you to do that. And then another one is that for holding, for example, you don't want to withdraw in a downturn market. You just want to withdraw, or you don't want to withdraw in a downturn market because you'll be withdrawn from your portfolio whilst it's losing value. Another one for holding would be, or for selling rather, is that you have taxable accounts, and if you sell at a loss, there's opportunity for you to realize a loss, and this will lower your taxable income, because tax is on investments is only taxed on capital gains and not capital losses. And then the risk of selling too early as well, which is another reason why some people might hold. And what experts are saying is that if you sell too early, you're potentially missing out on you know, a upturn, or when the market kind of turns around and bounces back. So that's also another thing. If you sell too early and then the market turns around, and then now you've kind of made those losses permanent, and because losses on your investments are more paper losses, until you realize that loss, then you make it permanent and you make it real and you realize that loss. So yeah guys, I hope this video is very helpful. Let me know down below, are you buying anything? Are you selling any of your investments? Are you reviewing your investment portfolio and maybe managing things around and balancing out your investment? Let me know down below. Was this video helpful? If you guys want me to do more investment type videos like this, let me know. Also let me know what type of investment videos you'd like me to do. I'd really be interested in hearing your input. As always, keep hustling. I will catch you guys on my next video. Bye.